familiar faces amongst our midst today. And I must say that you all are looking absolutely phenomenal. Please, a round of applause for yourselves. It is indeed a prestigious moment to have various stakeholders gathered here today, from our esteemed government representatives to our esteemed private sector partners, and amongst us, our beloved colleagues. Team, I just want to thank you for gracing this moment. All gathered here with one common purpose: to connect, collaborate, and chart the path towards a more resilient Botswana. Ladies and gentlemen, as we officially begin the day's program, allow me to once again extend a warm welcome on behalf of Bank Gaborone. I do, at this moment, acknowledge our Managing Director here in today, Ms. Ulibile Makupe, and I have already acknowledged our esteemed members of the government, our esteemed members of the private sector, and our valued panelists for the day. Ladies and gentlemen, you are once again welcome to the 2025 Bank Gaborone Executive Roundtable engagement. It indeed is such through platforms that we together shape the conversations that matter for Botswana's growth and transformation. Before we proceed, allow me to acknowledge and extend a warm welcome to our distinguished guests yet again. The protocol list has been observed, and my next speaker will definitely acknowledge the protocol in attendance. I will definitely be acknowledging the members of the media. I acknowledge you, Botswana Television. I acknowledge you, Miri, Media House, Botswana Guardian, The Patriot on Sunday, Radio Botswana, and any other media house in our midst today. You are very much welcome. Bank Gaborone is honored by your presence this morning. Your participation underscores the importance of collaboration between government, industry, and the financial sector in driving Botswana's economic transformation agenda. To open our session and set the tone for the day, for today's dialogue, allow me to please welcome, with a round of applause, our acting head of wholesale banking, Mr. Nchizi Chakalisa, who will be here to acknowledge all the esteemed guests in our midst and to deliver the opening remarks for the day. Mr. Nchizi Chakalisa.
Good morning, all. Let me observe protocol first. The Economic Advisor and Strategist at the Ministry of Finance, Mrs. Naledi Madala, Managing Director of eConsult, Dr. Keith Jeffries, Business Management Expert and SME Coach, Mr. Buka Matenge, Bank Gaborone Executive Team, Bank Gaborone staff, distinguished guests, fellow leaders, members of the media, good morning. Thank you. It is my privilege to welcome you to Bank Gaborone's first executive roundtable for the year. Thank you for making the time to join us for what we believe will be a powerful and constructive dialogue. We meet at a defining moment for Botswana's economy. Our nation is navigating a significant headwind, a downturn in the diamond sector, depreciation of the pula, a recent sovereign credit downgrade, and tightening liquidity in local markets. These challenges are real, and they ripple across every sector, impacting businesses, households, and communities alike. But moments like these also present opportunities for us, opportunities to rethink, to innovate, and to collaborate as stakeholders. And that is why we are here today. And I wish to thank you all for participating with us. This engagement is not just a meeting, it is a statement of intent. It demonstrates Bank Gaborone's commitment to facilitating insight and dialogue on the economic landscape, exploring opportunities amidst uncertainty, strengthening relationships with you, our valued stakeholders, and positioning ourselves as a trusted partner of choice. This speaks directly to our brand purpose, to be connectors of positive change. We believe that by bringing together diverse voices and perspectives, we can speak ideas, foster resilience, and co-create solutions to move our economy forward. As Bank Gaborone, we recognize the central role of the Botswana Economic Transformation Program, BETP, in chartering our nation's path forward toward diversification and sustainable growth. We see ourselves as active partners, obviously in the transformation, channeling finance where it matters most, empowering enterprises, and helping to build a more inclusive and resilient economy for all Botswana. This event demonstrates our unwavering commitment to work with our customers through every season. At Bank Gaborone, we've been here for it all. For 19 years, we've walked this journey with you. We see you not as a number or an account, but rather a partner in growth. Your success is our success. This is why we continue to innovate and outserve, delivering solutions that meet your evolving needs and empower you to thrive. Thank you for choosing Bank Gaborone as your trusted partner. Your confidence in us inspires our dedication to excellence. As we engage in these discussions, we do so guided by our brand values. So we are open-minded, embracing diverse perspectives and ideas. We are dedicated, committing to serving our clients with integrity and care. We are inspired as well, driven by purpose and belief that together we can shape a better future. Today is more than just a conversation. It's about action. It's about building partnerships that will help us navigate uncertainty and seize opportunities. Together, we can unlock new possibilities and shape a more resilient future for our businesses and communities. Thank you once again for joining us. We look forward to a productive and insightful conversation. Thank you.
Thank you, Mr. Nchizi Chakalisa, for those comforting words. Indeed, Dinja Dibofile. As highlighted by our Nchizi Chakalisa, this executive roundtable is more than a forum. It's a space for alignment, foresight, and action. It's where we translate insight into impact and partnership into progress. Under the theme, Navigating Botswana's Economic Shifts, Building Resilience Together, today's dialogue reflects Bank Gaborone's commitment to national priorities, such as the Economic Transformation and Recovery Plan and Vision 2036, ensuring that finance continues to play its role as a true connector of positive change. Thank you, Chucks, for those inspiring words, and for reminding us that the heart of Bank Gaborone is to be a relationship bank that constantly or consistently goes beyond for our customers, employees, and stakeholders. Allow me to repeat that. Pause, rewind, press, play. Bank Gaborone's vision is to be a relationship bank that consistently goes beyond for our customers, employees, and stakeholders. That spirit of going beyond service, beyond expectation, truly sets the tone for the discussions ahead. We now move into the most anticipated segments of the morning, our panel discussions, where we explore how different sectors are navigating Botswana's economic shifts and how public collaboration can unlock new opportunities. Today's panel brings together experts from the macro and microeconomics, SME and the banking sector, who will share their perspective on resilience, innovation, and growth. To guide this discussion, please welcome our moderator. Some say he is Mr. I Say No. Some call him, some say he is the man who consistently reminds us that it's not your money, but it's the customer's money. Some say he is the bank's bully. Please do join me in welcoming Mr. Tsaone Raboloko, the Chief Financial Officer, along with our distinguished panels, which he will be introducing.
Bagaitsu Dumelang, as you can all imagine, I'm not a bully. I don't look like a bully. Protocol has been observed. Let me also welcome you to our session this morning. I would like to repeat what my colleagues have repeated already. We gather today, ladies and gentlemen, at a pivotal moment, a moment where Botswana, like many other nations, is facing dynamic economic changes. We are seeing market fluctuations to structural shifts. The landscape is evolving rapidly. And the reality is, with change comes both challenges. Explore how our beloved country, Botswana, can not only adapt to these shifts, but emerge stronger, more agile, and more inclusive. We seek to understand the following this morning. How is the economy of Botswana doing, and how did we get here? We would like to understand how the state of the economy is impacting business. We will also understand what government is doing to change the trajectory of the economy. And finally, we'll also understand what Bank Gaborone is doing and is intending to do to support both business and government. As indicated already, our panel brings together a wealth of experience, diverse backgrounds. And we are doing this, ladies and gentlemen, because as the Setswana proverb goes, it reminds us, I am not going to translate that. But this speaks to the heart of resilience, to the ability to adapt, to innovate, and to thrive even in the face of adversity. I invite you to engage, to actively engage. You will have an opportunity later on to ask questions and to share insights. I ask, ladies and gentlemen, that this space today be a space of honest dialogue, bold ideas, very bold ideas. I think Naledi at some point will mention billions, not 100, not 200, multi-billions, and that's boldness. We want to encourage boldness and collaborative thinking. With that, ladies and gentlemen, let's begin our journey into navigating Botswana's economic future, and we are doing that together. Our panelists this morning, Dr. Keith Jeffries, please walk up. You are sitting on this chair here. I could read Dr. Jeffries' profile, but the thing is, if you don't know Dr. Jeffries, which rock do you live under, Dr. Jeffries? I will not read your profile. And then we've also got gentleman Buka Matenge, who's a prominent business development expert. He's an entrepreneur. He's a public speaker. I'm not done. A public speaker with 25 years of experience in the SME sector. Buka is a mentor, a problem solver, and the driving force behind the Business with Buka Matenge initiative. And this initiative is aimed at fostering entrepreneurship and economic growth in Botswana. Buka is seated already. Then we've got Naledi Madala. Naledi is a seasoned economist and policy advisor. She's currently serving as policy advisor in Botswana's Ministry of Finance. She's an experienced research fellow with a demonstrated history of working in the think tank the challenges we are going through at the moment. If you just allow me to take my seat. And just to get going, I'll ask Dr. Jeffries to start with you. If you could just give us a sense of what is the state of the Botswana economy today? What's happening in the economy and how did we get here?
Yeah, that's a big that's a big topic, which could keep us busy for a week. I mean, let me start with how did we get here, and I think the path to where we are has really come about as a combination of long-term trends and then more immediate changes. And the long-term trends are that obviously we've had a diamond-driven economy for decades, and that's had implications for government budget, balance of payments, exchange rates, foreign exchange reserves, and all of those things. But as with any mineral-driven economy, that is finite. And the impact that that has is finite, and it needs, and we need to recognize the fact that that's not going to go on forever. And one of the things that it has enabled us to have is firstly a very large government, with government spending taking up a huge proportion of GDP, and secondly, a relatively strong currency. And given the fact that diamond resources are finite and also very particular in their characteristics, we needed to have had a long-term plan to adjust away from that diamond dependence, and essentially we haven't. In that our government has remained too big and our exchange rate has remained too strong. And that is something that on a long-term basis was always going to cause problems for the economy. Essentially that's failure to adjust away from the dependence on diamonds as diamonds became relatively less important. And that was always going to be inevitable. And I emphasize relatively less important. If you've got a fixed amount of diamond production, 25 million carats, and you do it forever, it's becoming relatively less important as the economy grows. Now, on top of that, we've had, in the last 2 or 3 years, a crisis in the diamond industry, in the demand for diamonds, particularly for natural diamonds, has fallen off a cliff for all sorts of reasons we can talk about if necessary. And that short-term crisis and the collapse in diamond exports has really meant that the unaddressed pressures from the long-term changes have suddenly become a crisis. And I would compound that by saying that, when we've had crises in the diamond sector in the past, and this is not the first time, we've had pre-global financial crisis, COVID, diamond exports collapsed, but on those occasions, there's always been a recovery. This time, it's different, as they say. And I think this is a structural change, not a cyclical change. And the policy response to a structural change has to be a structural policy response, not just whereas with a cyclical issue, if you've got buffers, you can ride through it. But you can't ride through a structural change by doing nothing. And I think that's where we've run into problems. So, as I say, there's a combination of long-term trends and the short-term crisis have led us to where we are. And where are we? Well, obviously the economy is in recession, negative growth last year. I think we're going to see negative growth this year. There's a wide range of estimates around. I know, my forecast is about -1. I think Naleda's Ministry of Finance is very similar. IMF is similar. Then Moody's the other day came out and said -6, which I thought was quite shocking. World Bank's projecting -3. So wide range of estimates, but all negative growth for this year. So continued recession, and then as you mentioned in your introduction, there's all sorts of associated pressures in terms of exchange rates, weakness, liquidity issues, but they're all emanating from the same problem, which is the original process that I described, and I'll come back to government, as is often the case, the problem is a fiscal problem. And with government being too big and spending too much, and spending it very badly, and borrowing too much. And so, why is there a liquidity crisis in the financial sector? It's because government is sucking everything up. That's the problem. That's the problem. Why are interest rates going up? It's because government's driving up interest rates. So the root of the problem is an inadequate fiscal response to those long-term and short-term trends that I mentioned. So I could say more. Let me stop for the moment.
Yes, thank you for that, Dr. Jeffries. And some quotable quotes coming out there. You can't ride through a structural change. We are borrowing too much. And all the problems that we are facing today are emanating from the same source or the same problem. What I would like to do at this point, I'm going to get you, Buka, to just give us a feel of what businesses and SMEs are experiencing. And then later on, Rex, I need you to come in to just give us a flavor around what is actually happening with interest rates. And this will be of particular interest for our clients in the room. What's happening on interest rates, what you are thinking, and then Naledi is going to come in to give us an indication of what government is doing. But over to you, Buka, on what businesses are and SMEs, which you are quite interested in. What are they experiencing today?
Thank you, Mr. T, and good morning, everyone. As one famous minister once said, Abuare, for SMEs, and it's basically that everybody who spends now will tighten the belts, so the spending on services that SMEs provide, they're cut short, so there's less demand. So you're talking to your caterers, flowers, those that supply water, basics that we used to consume from corporate to government. So this means then there's no business for SMEs, which then leads to cash flow crisis. We sustain on a daily basis. And the only people that are enjoying what we right now, Machonisa, because then we now have to run to Machonisa to bridge the gap. 10,000 tehale, what 20,000 there. Before you know it, it's that after that after that. You borrow from family, trying to sustain Lebone, wherever they are. So that's basically what we are feeling. But over and above that, where it used to take 30 days, well, it's never 30 days, sometimes 60 days to pay these services to the SMEs, now it takes longer, or sometimes never. And this is where, as Dr. Jeffries is saying, we are headed. And there's going to be, if things don't change, we're going to see a situation where people get services and then don't pay for them. And I don't want, unashamedly so, because it's been, the SMEs have been the backbone in terms of Duela late. It then becomes the norm now, because we all have to understand what the economy is down. And so I see a lot of businesses collapsing, and I see a lot of go in the matter between. In the matter between. We live there, really SME. And it's simply because the SME, we are getting into challenges that we can't solve. There's no liquidity in the market.
Buka, thank you for that. I almost got emotional, but I'm not going to. I'm going to ask the question, but how do SMEs get here? Is it not because they maybe relied on government? They relied on government work as opposed to diversifying their income streams. Could that be the challenge?
Yeah, but I'm going to ask you a rhetorical question as well and ask you, who hasn't been relying on government?
Good.
The private sector, we all have been relying on government. We all have been relying on diamonds.
Yes.
So it should not come, you know. Yeah, but SMEs, yeah. So we should have been, as a culture, had seen what's going to come and structurally started changing to buffer what was ahead. But you know what? And this is where we are.
Yeah, Buka is the first person to ask a moderator a question. I'm going to come to Rex. What are the banks seeing, particularly on interest rates? What's happening? And we've got clients and customers here who and viewers at home who need to understand what's happening on interest rates in the market today.
Thanks. Yeah. I think, like Keith already mentioned, there has been a big shift. We have seen the decline in diamonds over time, which has also made government. We have also seen a big fiscal deficit, which has resulted in government borrowing from the domestic bond market. The borrowing from the domestic bond market is not a bad thing altogether. I think as banks over time and capital markets, we've been bleeding and crying for capital markets depth in the market. But it's just that it comes at a wrong time, whereby there's really nothing flowing from the other side. So then that meant that when government, private sector, banks, corporates, and government, they are all competing for this finite resource, leading to a decline in market liquidity. And that decline in market liquidity in general then meant the immediate shot up in deposit rates. I think if this could have been more coordinated, if we could have predicted it well in time, and it being a bit more coordinated, such that that increase over time can be softened. But we are where we are now. That shift especially happened within a short period of time, 2 to 3 years, which then resulted in a deeper borrowing, and banks starting to have to scramble for deposits. That scrambling meant rates now shooting up to double digits, which is something that we have probably never seen post the global financial crisis. So this is where we are. We have seen that sharp rates, increase in rates, and one could sit and wonder. We have seen this sharp increase in rates from banks, being in the form of prime lending rate and deposit rates. What is really happening when we don't see the change in monetary policy? The conundrum that we are really faced with is that over time, inflation has not been a big problem for Botswana. We have an inflation target band of 3 to 6%. And for the longest time, I mean, even within the 2 to 3 years period where we have experiencing the problem, inflation has been forecasted to just remain below with that point. It's only now that it's starting to move within the band, which didn't encourage the central bank to hike the rates.
Yeah.
But we then saw a big different problem on the liquidity side, which then forced banks to hike their interest rates in response to the cost of money that they are seeing in the market, driven by this competition for this finite resource called liquidity.
Rex, thanks. So basically you're saying banks have raised their rates, both on the lending and deposit side, If banks have raised rates, you wonder what Bomachonisa that Buka is referring to have done. If banks have gone up by 5, Bomachonisa have probably gone up by 10. Naledi, I'm going to bring you in here. What's great is our government is not in denial of the problems. There is no denialism here. And as we listen to government, to ministers, and to people like yourself, there is an admission to say there is real problems in the economy, there are challenges. We are interested in finding out from yourself what is government doing about this, what are the thoughts, and while you respond to that, we are also very keen on BETP. If you could, we'll allow you a bit of time just to go to town on BETP to give us better understanding of it and what the outcomes intended through it are.
Okay, thank you very much, and good morning. Thank you, Mama Kupe and your team for the invitation for us to come and share what the Ministry of Finance is doing on behalf of government. You know, when Dr. Keith spoke about the current environment, I couldn't help but want to also add on to what he's already said, to say, you know, I think as an economy, because we've always had diamond revenue, we never paid much attention to how inefficient government is. Because with every problem that came, we almost sort of just threw money to it because the revenues were there. But if you look at what we started doing early this year, and we are making very difficult decisions, and we are becoming very unpopular for the decisions that we are making, but unfortunately there's no way out of it. If you look at the decision that we made earlier this year to say, no, we want to scrutinize what government is spending on, bring the GPOs to finance, we want to double click into almost everything that everybody is buying across all of government. If we are beginning to see significant shifts, if you look at the total number of GPOs generated in May 2025, before we brought in this shift, that month alone, the GPOs were sitting at 1.6 billion. You begin to see the trends going down significantly. Between September and October, you are seeing GPOs below around the levels of 400. That means we've been spending on things that we can actually do without. So there's more scrutiny now in terms of what are you spending on? And we are even beginning to pick very interesting patterns that for us are like, this is where the reforms are needed. I think if you look at travel, for example, we are now saying, you know, be very strict in terms of your travel, the numbers of people who are traveling, and even then, we are beginning to see the numbers coming down. So these are not things that anybody gets excited when you implement, but unfortunately, we have to do it because we spend a lot of time not paying attention to how inefficient this big machinery that is called government is. I also want to highlight to you that, you know, over the years, you have a budget and say 30% is development budget and 70% is recurrent budget. But there's always been this focus on how inefficient we are in spending the development budget, which is only 30%, which means if it's a total of 70 billion, 20 billion is development and 50 billion is recurrent. Nobody is saying, but this 50 billion, how are you intentionally spending it? So that is the pattern that we've been building as a country, and so much focus on the small percentage, the inefficiency in the small percentage, when the big chunk is really going on the recurrent side. So that is what I wanted to add into the landscape, and when Dr. Jeffries responded to the current landscape, that we have responded with some of the minor reforms, but the big picture thing that we are really coming out with as a government is really the transformation program. I think I want to, as you said, Mpho, give a bit of context to how we decided on going the transformation program route. I think, one, it was very clear to us when we started that we need some kind of a strategy that will bring all of government into one playbook, literally where the left and the right hand know what each other is doing. That was one. But it was also a feedback from the National Planning Council, Advisory Council, to say, you know, the way that we do our NDP, National Development Planning, we often have sectoral strategies. We do not have an overall strategy that informs the NDP, the National Development Plan. So that is how now we decided that no, we actually need a strategy that is going to be an anchor to the National Development Program. So you would see that the way that we've done it is that the Botswana Economic Transformation Program is actually the anchor strategy for the National Development Plan. And it's currently before Parliament, and immediately they finish discussing the NDP 12, they're going to be going into the discussions for the Botswana Economic Transformation Program. And the way that we also thought about it is we do not have the luxury of time, because the economy is literally crumbling, and we need to respond with something that is going to bring results immediately. And that is why the methodology that is anchoring what we are doing, the Big Fast Results methodology by Pemandu, is something that really stood out for us, because it's a methodology that says, yes, you need to change the landscape, you need reforms, but you also need to crowd in private investment. So this is a response to say we need to be very intentional about having a private sector-led economy, and through this program we are being very deliberate in crowding in the private sector. The process really started with a call for ideas, and the response really was a very strong message, because we got a response of 6,925 projects, and we started doing the filtration process. We got responses from all over the world, and even locally we got very strong responses across the different sectors that were identified by Cabinet to say these are the priority sectors. We came up with a true north. I think if you look at the National Development Plan discussions, you will realize that the ministers are all talking about a true north, because now we have an overall true north for the economy, but every sector that has been identified also has its own true north. So we identified 6 economic sectors, we identified 3 social sectors, and all of these had projects that were categorized according to these sectors. And now we went into something very different. I must say that, you know, the lab experience that is part of this Pemandu Big Fast Results methodology is something that was very unique, and something that brought all of us together. You know, on average, we had about between 250 and 300 people sitting together, doing filtration together, planning for the future of this economy together. And at first, there was actually some resistance. You know, as a manufacturing business person, you've probably seen that the next person is also doing something almost similar, and you're like, no, but I'm not interested in having someone who are a competition doing the same, sitting together and planning for the future of the country together. But later on, you actually realize that no, we're actually operating in the same market. We need to solution holistically, because at the end of the day, the environment needs to work for all of us. So to almost complete my speech on my deliberation, we ended up at 186 solid investment-ready projects. And 60 of these are what we call making the most, meaning that these projects have almost have everything. They just need very minor facilitation. They need a change of land use. They need a permit. They need some small amount of funding that could come from banking, that could come from the different funders. So very strong projects that have come out of the transformation exercise, and we are now moving into the execution part of the exercise.
I thought you'd get a round of applause from the...
It is hard to get any round of applause in this economy.
Yeah. I'm interested in 60 projects and timelines. When do we think we are going to start seeing the first rollout? You know, when is this? When is it gonna? When do we start seeing impact coming out of this, or at least implementation?
Yes, that's a good question. I should also go back to saying why we chose the methodology that we chose, because it's so laser focused on execution. Like I said, that, you know, over and above just that we need to reform the environment, we're also saying these projects immediately need to be executed. So we have started. But maybe before I get to that, let me also say that when we look at this 186 projects as pathfinders, meaning that for every project that we enable, we also make sure that the environment works for everyone, to ensure that the next person with the same idea need not go through the same challenges that this same project that we have enabled has gone through. So complementing the 186 projects, we also have a roster of legislative changes that need to happen to enable this transformation. But to your question of execution, we have already started. We have a BETP secretariat sitting in the Ministry of Finance, and day in, day out, we have people who are actually following up and ensuring that these projects get executed. But I must tell you that, we are all beginning to see pockets of traction. A lot of some of the projects had very complex land issues. It's not just about to say, government has, I want to give an example. It's not just about government has sold this asset to an investor, and this investor is almost ready to invest, right? You realize that even for that investment to come, for the for the permits, for the licenses, for the land use, all of those items, if nobody is sitting down and making sure that they happen, you may find that that same investment has been hanging for over the last 3 and 4 years. And this is an example of projects in the BETP. To say that now we have somebody sitting down and ensuring that this project actually is gaining traction. Every day there's someone talking to the land authorities to say, how far? Yesterday when we spoke, you were saying that, this is what you are doing. How far are you with that action? Yesterday when you spoke, you were saying you are speaking about maybe it's a license or whatever it is, prospecting license, just according to whatever projects that we have in the roster of the 186. So we are beginning to see traction. It's not easy because we are not an execution cultured people. But the good thing is we've also managed to keep Pemandu here for the next 18 months to really handhold government in terms of driving this execution. So we will see traction. I'm not able to tell you tomorrow or in a month's time, but I can tell you that there's progress.
Okay.
Because it's 186 projects, and each and every one of them, we make sure that we follow up and we follow through, which is something that has been missing.
All right, thank you. So the best way to get a timeline, because you say you can't tell us now, we'll probably have a follow-up engagement like this, and we'll ask you the question again.
No problem.
Maybe,
And
maybe in 3 months' time.
maybe I should also indicate that the BETP has actually been approved by Cabinet, and is currently has been tabled before Parliament, and immediately after the discussions for the NDP 12, the discussions for the program itself will be the ones that will announce that.
All right, thank you. Dr. Jeffries, I'm going to ask you a very open-ended question. Your thoughts on the BETP?
And the lady knows what I'm going to say. I can't give you any thoughts on it because it's still secret. I don't think anybody, I don't have it.
Yes.
I've been begging.
And
I don't have it. I don't think anybody else has it, so I can't give any thoughts.
You can't give
I mean, look, I will give you the thoughts that I like the approach. And I think this project-driven, private sector-driven approach is great. And it is a break with the past. I really hope, but I fear slightly, that some of these things that the ladies just mentioned about the regulatory issues and enabling environment, I'm slightly worried that those are absent. And I say this without having seen the BETP. But in some discussions I've had, and I think these regulatory and enabling environment issues are really, really critical. You can have as many projects as you like, but if you don't deal with an enabling environment, they ain't going nowhere. So, and I'll give you an example. So, one of the areas I think in the BETP is beef exports. And clearly we have potential in beef exports. But at the moment, and our true north is private sector export-led growth. at the moment, it's illegal for the private sector to export beef. Since April, there was a waiver prior to April, but those waivers were withdrawn in April, and it is illegal for the private sector to export beef. Now, how is that consistent with a private sector export-driven economy? It's not, it's completely not. And so what we've got is a regulation from the Ministry of Trade, Ministry of Agriculture, prohibiting the private sector from exporting, all to protect BMC. That's all it's about, protecting BMC. So we've got, comments about private sector export-led growth, getting inefficient SOEs out of the picture, creating a level playing field, but the law and the regulation and the legal structure is completely the opposite of what is needed. Now, obviously it can be changed. It could be changed tomorrow if government wanted to, but it's not. It's actually been tightened in the last few months by governments in an anti-private sector manner. So what I fear is that, and I say this without having seen the BETP, that it doesn't have enough on these overall business climate investment reforms. Maybe they're there, but I did have one discussion, and I was told, no, don't worry, it's going to be an NDP 12. And it's not. NDP 12, I'm very disappointed with. And so I do fear that the big things that could really improve the investment climate and make those projects feasible are being neglected. That's my worry. But maybe I'm going to be pleasantly surprised when the document is finally made available.
Yes. All right. Thanks for your thoughts, Dr. Jeffries. Naledi at some point will probably want to allay your fears.
I hope so.
We'll give her that chance. But I just want to move away slightly, and I want to bring you here, Buka. And we don't see enough Botswana SMEs growing into mega businesses, growing into the region, going global. What is the problem? What are we getting wrong?
Yeah, I think I'll start off by just saying, Dr. Jeffries, in terms of the bottlenecks and the red tape. We live in a country where growing from micro to a large SME is almost in difficulties. I've never seen, I can't give you anybody that I'd say they've moved from this stage to this stage to that stage and to going international. And it's basically because of the bottlenecks that we have as a system and as a people. But over and above that, what I've realized, having been an entrepreneur myself, I'm speaking from a lived experience. Growth is about trial and error. It just basically is. But if we're a culture that is not patient emotionally around growth of businesses, it becomes very difficult. And failure is shunned upon. Or if you failed, nobody wants to deal with you. And I know I failed more times than I can remember. Banks will not want to deal with you. CEDA will not want to deal with you. Nobody, but you've got so much, a wealth of experience because you know what not to do in the next project. But we shan't fail. So we're not patient with ourselves when it comes to growth. Other countries, other cultures, they beat us there because they are patient when it comes to growth, and they understand the risks that are involved in entrepreneurship and SMEs. But there's also another patience that we lack. SMEs in Botswana lack patient capital, just to scale. But nobody will say, you go to our organization, Ring, it deals with SMEs. As soon as you get a loan, 3-4 months down the line, 6 months down the line, you're expected to start paying. So try lele. For some of them, especially in manufacturing, you started this the client said it was okay, but when we start delivering, they say change this, change that. So it's going to take time for you to get it right into the market. So we lack that as a people. So I think if we start having that conversation around just the support and understanding, guys, it's difficult for SMEs. It's very difficult, especially in the culture and the environment of Botswana. Ease of doing business is very difficult to do business in Botswana. So speaking for SMEs, this office. There's an office called Counseling, Office 93. You go there, you want to do something innovative. No. Why? Even innovation, we stifle it because you can't bring anything that's new if it's never been done. A booker in South Africa, moving into the next point, why we don't scale. A booker in South Africa, in Soweto or wherever, name a place, Aira Tamati Sauce, already have shelf space in Gaborone or in Francistown, what you call plug and play. But now we don't have those systems. A booker who's producing the quality, we are also very impatient. That is also what we always say. Hey, Botswana make quality. I think quality of Botswana is got class. And it's the culture, it's what we've embedded in our heads. But, we used to call the Chinese products Fongkongs back in the day. Are they Fongkongs now? No, they are not. Because they were patient in building that which they knew where they were headed. So I'm quite happy with what Melanie was saying, in that the government now is starting to be intentional and deliberate about what they want in the private sector. So I'm hoping with what they have put on the table, once we become intentional, even as a culture, because we will learn. So some of these things, we've been a culture, yamananeo. So we wait for the next linaneo, it goes, we go into the next linaneo, it goes. So we go into the perpetual cycle of not growing because we're just waiting for, we call it the pacifier time, so that but we are not growing as a culture. So we need to be intentional around these areas. Or, you know what, it's going to take time, we understand, but here is our true north when it comes to developing SMEs in Botswana.
Yeah, Booker, thank you. Naledi, I'm going to ask you to come in. First, just to give a bit of comfort to Dr. Jeffries. And you actually realized that when Booker spoke, there was a lot of from the room. It would appear that a lot of people share his sentiments. So if you could maybe just touch on the issues they touched on, just to see what the thinking from government around some of these issues are, or from the Ministry of Finance, which you work at.
Yeah, no, thank you very much. Dr. Jeffries and I have actually had lengthy conversations, and I already knew what he was going to say when you asked him that question. But I should say that, as I said earlier, that the projects that are in the BETP, we regard them as pathfinders. For each and every one of them, anything that came with it's there as part of the legislative changes that need to happen. I'll give you an example. There's a project that wanted to do cable networking in I don't know if it's in a national park, and the Act doesn't recognize that as a mode of transport. And because of that, many investors have wanted to do the same thing, but have not been able to do it because the Act doesn't recognize it as a mode of transport. They only recognize road and the normal stuff. So we really were very intentional in taking care of the small and big things alike. But for some of the big items, maybe they will not answer fully to Dr. Jeffries' expectations. But I must assure you that we have a good number of legislative changes that are accompanying the BETP. Maybe not to Dr. Keith Jeffries' expectation, but they are there. And I always keep saying this, we could not boil the ocean. We absolutely needed to start somewhere. And this is a start. And I should also say that we've made a decision that the methodology and the process of filtration and enabling projects and ensuring that, investors are not sent from pillar to post. Just from receiving 6,925 projects, we realized that no, this is feedback to us as government to say this is needed. So we've decided that, okay, there's the 186, but we'll also make it a live process. So if they are not in there, they will come. It may not answer everything, but a good number of changes are in there. And if they're not in there and they're absolutely required, they will come. So there's commitment to ensuring that the landscape works for all, for everybody.
Naledi, thank you for that. And I really think the ministry does deserve a round of applause for the speed with which you turned around the 6,000 received documents to 186, as well as the speed with which the labs were conducted. That should be complimented. Buka, I'm going to jump from being a moderator to tell you what Bank Gaborone is doing for SMEs. And once I've done that, because you may not trust me, I'm going to ask Rex to also come in to tell you about what Bank Gaborone is doing. You talked about banks not willing to talk to somebody that has failed. And I assure you that at Bank Gaborone, we don't look at deals and find reasons not to do them. We look at deals and find reasons to do the deals. We will sit with you and work with you to see how we structure this thing to make sure it works for you. I can also assure you that if we are unable to do the deal, if it's patient capital you are looking for, and we don't think we can structure it that way, we've got partners that we can link you with to say, we think this is something that somebody else can do. Maybe you need an equity partner and that sort of thing. That's how we do business at Bank Gaborone. Rex, you need to allay the man's fears. I'm moderator now, but any thoughts on?
Important, yeah. So yeah, like Tia said, at 3G we are open. I think failure is not. We understand that failure is part of.
Mike.
We understand that failure is also part of growth. So with every business, we like to hold your hand. We pride ourselves with being a relationship managed bank. So we are your trusted source of advice. We are your trusted source of any financial assistance. So it might not come from our balance sheet. It might come from our partners, et cetera, et cetera. Yeah.
All right. Yeah.
And Tia, maybe just to add to your
Yeah.
point on SME financing, I think as a country, it's probably high time we also start thinking about certain non-traditional ways of approaching SME, not banking. So in the spectrum, you've got banking, you've got development finance, and you've got equity finance. So when we start thinking of development institutions like CEDA, start thinking about how we can have an equity participation, possibly in the form of a fund. We have seen how funds have worked, even for the benefit of their own members, like the BPOPF. But now, the same thing focused towards SMEs, could be in the form of venture capital, and that can be partnered together with banking. So where you've got a new entity or an early stage SME, or even one who has growth potential, and we feel like their need, it's possibly an equity-led need that really needs lazy participation, we then go in, as long as we trust that person and we trust what the business is looking to do, how it's going to develop the industry, and how it's going to give back to the nation. We can put in capital, then banks can come in to kind of smoothen the cash flow and help on the other side. That way, I guess, it can help us to multiply and take us further.
All right, Rex, thank you for that.
Dr. Jeffries, I'm going to come back to you. And I want to talk about the recent changes in the exchange regime that we saw happening a couple of months ago. And if you could really give, for the benefit of the room, just explain to us what really happened, what the nature of the changes were. And this is particularly so because at the time, particularly as the bank, we got quite a lot of calls from clients, some of them in the room, to say, but what does this mean? And how is it impacting me? And then finally, if you could touch on whether that has been successful and what you are seeing in the next 3 to 6 months on the same matter.
Right. So I think, as everybody knows, our exchange rate regime is a pegged exchange rate. It's a fixed exchange rate. It's not market determined. So the pooler is pegged by Bank Gaborone to a basket of currencies. And it's a crawling peg, so it's an adjustable peg whereby the value of the pooler against the basket changes by a very small amount on a daily basis, in line with the annual rate of crawl. And the crawl could be upwards, it could be downwards. Generally, recent years it's been downwards. But the key point is it's not a market-determined exchange rate. It's a fixed exchange rate. And one of the consequences of that is that Bank of Botswana needs to have very high levels of foreign exchange reserves to back that peg, because the way in which it works is when the BOB quotes exchange rates at which it will trade with the banks, it essentially is saying we BOB will trade unlimited amounts of that currency at the quoted rates. So the rates don't depend on quantities, unlike in a market-determined exchange rate, whereby the rate would depend on the quantum. So what has happened is that our foreign exchange reserves have been declining over the years, and for a number of reasons, but a lot of that has been, it all goes back to fiscal policy. If you look at why have the exchange reserves been declining, it's government budget deficits by and large is the driver. And our foreign exchange reserves are approaching a level where the fixed exchange rate will no longer be sustainable. And we are in a situation whereby, in my view at least, and this is not just my view, I know IMF shares the same view, that the pooler is overvalued. And there's lots of ways that one can see that. One is it contributes to our lack of competitiveness, is that the pool is too strong. But also you can just see, just looking at the foreign exchange market, is the amount of forex flowing into the market from exports and transfers like SACU, etc. The amount of forex flowing into the market is far below the amount flowing out. So there's an imbalance in our foreign exchange market. And obviously in a market-determined system, if your supply of foreign exchange is less than the demand, the currency is going to depreciate. So we've got a currency which has this imbalance between inflows and outflows and a structural shortage of foreign exchange in the market, which is going to tend to put downward pressure on the exchange rate. But it can't because it's a fixed exchange rate. So what did BOB do? It's slightly increased the rate of crawl, but not to any significant amount. It went from 1.5 to 2.7. So, that's almost unnoticeable. But the big change, so when I say BOB quotes a rate to the banks, it quotes a mid-rate with a trading margin. And the trading margin has historically been very, very tight, very narrow. So effectively, almost no trading margin. It would buy at a rate slightly above the mid-rate and sell slightly below the mid-rate, but that range was so narrow that it didn't really make much of a difference. So what it did was it broadened that range from 1% to 15%. It's a huge increase. So plus or minus 0.5 to plus or minus 7.5. And so what was the purpose of that? It was to try and make a step on the path towards a more market-determined exchange rate. So I think the long-term objective is that we move away from a fixed exchange rate. Now, there's lots of ways you can do it, and there's lots of, doesn't mean we have to go for a floating exchange rate. You know, there's a lot of possible exchange rate regimes between a pegged rate and a floating rate. And there's all sorts of transitions through that spectrum. So what BOB was trying to do was to introduce an element of a market-determined exchange rate, but still within the overall parameters of the standard policy. And they particularly wanted an interbank market to develop with forex trading between the banks. Because when that buy-sell spread was very narrow, there was no real incentive to do interbank trading because essentially everything took place either side of the mid-rate at the margin, but that margin was very narrow. So what happened? Well, there was a lot of confusion, but I think especially initially. But my understanding is that things have now bedded down somewhat, and maybe there's many bankers in the room, treasurers, etc., can tell us what's happening from a bank perspective. But from what I observe is that there is a lot of market-based activity within that very broad spread. Not necessarily for retail customers. You know, if you're a retail customer and you want to buy $250, you're buying at the edge of the spread, and that spread is very wide. But if let's say you're an exporter and you want to sell $1 million, you will not sell that at the published rate. You will go to your bank and say, right, what are you offering me for $1 million? And if you don't like it, you'll go to another bank. So there's a lot of moving between banks to get good rates, particularly for exporters. Because we've got this structural shortage of forex, if you've got forex, you're in a very strong position. If you want to buy forex, well, you're not in such a strong position. You've really got to take it. And and the reason why if you want to buy forex, you're not in a strong position is that the banks get the majority of their forex from BOB. Because, so again, getting into the structure of the forex market, we have a shortage of forex inflows, and a lot of those forex inflows are to government. So all the SACU money goes to government, and therefore it sits in BOB. All of the Botswana tax payments go to government, and therefore it sits in BOB. So BOB is the recipient of most of the forex. And therefore, when banks buy forex, which ultimately come from those sources, it's coming from BOB. So banks don't have much choice. They have a bit of choice, but they don't have much choice that, at the margin, they're paying that huge BOB spread for their forex. So they've got to pay that very high price. But if you're selling forex, you're in a very strong position. So you can negotiate a very good rate. So what does that mean? So if you look at the published retail rates by the banks, you will see that the pula was devalued if you want to buy forex, and it was revalued if you want to sell forex. So you lose both ways. This is on the published rates. But what happened in practice is that if you're selling forex, as I say, you forget the published rate. This is if you've got a decent amount. You forget the published rate, and you negotiate a rate, and the negotiated rates are much closer to the BOB mid-rate. So actually, your big exporters and sellers of forex have done okay out of this, as long as they're sensible. But the importers and the buyers of forex have not. They're buying at that devalued rate. So if you look at, so one big change is that you can no longer tell what the exchange rate is by looking at BOB. The BOB publishes rates on its website every day. But that's no longer an indicative rate of what the exchange rate is. You have to go to Bloomberg or someone like that. And what Bloomberg will tell you is that the pool has been devalued. The reason is that that's change in the rate for importers and buyers of forex. The pool has lost about 7%. For the sellers of forex, there hasn't really been a change for the corporate sellers of forex anyway. So the depreciation, devaluation, whatever you want to call it, is what dominated. So if you look at the Bloomberg rates, pool is now 7 or 8% lower than it was in June. So de facto, there's been a devaluation. But there's also this huge spread of rates through the market, depending on who you are, whether you're buying or selling, and how much you've got. You know, if you're dealing in a couple of $100, then sorry, you're not in a good position. But if you're dealing with a couple of $1 million, you're strong. Or at least if you're selling. Anyway, what's going to happen? Although there's been this de facto devaluation, the pool is still overvalued. So I would anticipate that we will see further weakening of the pooler. And that could happen in two ways, one good, one bad. It could happen by an accelerated downward rate of crawl. So if I was still in the lady's job, I would be pushing for an accelerated downward rate of crawl to bring the pooler value down, but in a controlled manner.
Yeah.
That's the good way. The bad way is if we dig our heels in and say, no, we're not going to weaken the pooler, and also we're not going to do all the other stuff which is needed to stabilize macroeconomic policies, and the peg breaks overnight. You know, one day the OB or government says we no longer have a pooler basket, the pooler's market determined, and we have a floating currency. And that could be absolute mayhem. Yeah. Because who knows where it's going to settle. I've got my views on where it will settle, but it's not going to be pretty. And it won't be a small drop in the value of the pooler. So I think the pooler has to weaken. As I say, it can be done in a controlled and managed manner, or it can be done in an uncontrolled and chaotic manner. But it will have to, you know, the current position of where we are is not sustainable. And so it will weaken, and it depends on a lot of other things. If the budget is stabilized and the budget deficit is cut and expenditure is cut, that will help to manage the situation because that will help to protect the reserves. If there's recovery in diamond exports, that will help to protect the reserves. But if the reserves keep dropping at the rate that we've been seeing, the peg is not sustainable for, let me not put a time period on it, but let me just say it's not sustainable.
All right, thanks, Dr. Jeffries. Naledi, you looked at me. Do you want to say something on that? And then once I have your thoughts on that, I'm going to ask Buka to come in just to see what businesses and SMEs have experienced immediately after those changes, if you can. But first to you, Naledi. You seem to have a view.
I do.
Yes.
I do. And I just want to give an assurance that the other scenario, negative scenario that Dr. Keith spoke about is exactly what we are avoiding. And it's exactly the reason why we responded the way we did. I know it was very hard, it was very unpopular, but if we did not, the rate at which we were losing reserves was going to lead us there. Yeah. So it was very important that even unpalatable as it was, we needed to do it. And the fact that we've already responded in some way that protected I think the question is, did we achieve, besides everything else that came with the changes, did we achieve what we were looking to do in terms of protecting the rate at which the reserves were declining? Yes, we did. We started to see some stability in that aspect. So without getting in too much into that issue, because I also don't want to say this is what we are doing, this is not what we are doing, I can give assurance that we are in, the central bank is in total control of this issue. I'm really tempted, also compelled to speak to the SME issue without breaking your trail of thought. Because earlier on there was a lot of discussion, and I felt it will be unfair to walk away without speaking to how government is responding to the SME issue. I think early this year when we did the budget speech, we spoke about the fund of funds, which was exactly an idea about we recognize that the funding model for the DFIs, your CEDAs, doesn't speak to the needs or to the demands of SMEs. It's almost a one-size-fits-all model that doesn't allow that differentiation of who's coming to them. So we've started responding. I know there's small traction because we've been focusing so much on the fiscal prudence, fiscal consolidation issues, and on the BETP. But even in some of the reforms that we mentioned in the budget speech, we are making some traction. I'll assure you that the Botswana Stock Exchange has already started setting up an SME fund. You spoke about the importance of fund, and I absolutely agree with you that they then have the ability to maneuver much better than a different approach. So the BSE is setting up a Motaone SME fund, which is going to be very niche based on funding to SMEs. So we've already started responding to the demand that is on the ground in terms of funding SMEs.
Naledi, thank you for that. Thank you for the assurances. We need those. Buka, you have a minute just to give us the lived experience of the SME arising out of the changes in the crawling peg recently. And then a minute, and then Rex, I'm going to also ask for your thoughts on that before we go to the audience, and then we need to head to a close soon. Buka?
Well, but it's more but it's because it's technical.
Yes.
At the ground level, we rely on experts like Dr. Jeffrey and Bonaledi to tell us with informed data on why they took such decisions. But at the basic level, you realize things start becoming a bit expensive. Yesterday, Reka Tamati to go, Masape was buying tamati for 2 pula to go and prepare a meal, CBD. Now, Kamuso, we Reka 4 pula. But the CBD customer still expects the price to be at 25 pula. And this is what I was going to speak to her. You see, especially the women-led informal micro and youth-led enterprises, it's very difficult for them. Because even when they make decisions not out of anything that's informative. A plate of lunch 10 years ago was 25 bucks with CBD. It is still 25 bucks with CBD. And all of us here expect to get a plate of lunch for 25 pila. All of us here. More SME. But get this. We can also tell that SME, I'll pay you tomorrow. Or I'll pay you next week. This is the lived experience. But you can't walk Moscow Mat, get grocery, and say, we don't do that. So this is the culture and the mentality of why we don't realize these are the foundations, these are the anchors the economy at a basic level. So if you can get it right at that basic level as a people, government is Rona, then it just tells you that we are living in an economy and we had spoken about this. I always speak about it. SMEs are the most misrepresented, misunderstood, miss everything, really. Botswana. Simply because we don't know how to really help them. So that when they collapse, because I'm in the space, I think the economy of Botswana will collapse because our kids won't be in school. You won't be having your lunch at 25 pila, or the 5 pila in the morning. So a lot of things will just fall off. These are the anchors, Aruna, so that we can then deal with the bigger issues.
All right. Thanks for that, Buka. In a minute, your thoughts on the crawling peg and what your clients are experiencing.
Thanks.
Yeah.
So
Your mic.
So obviously there's changes that happened recently in July to Naledi's point and to Dr. Keith Jeffrey's point, these are things that needed to happen to protect the foreign reserves. As painful as it was, but importantly, we ought to protect the sovereignty and protect our reserves. So that came with a bit of pain, obviously to importers. In general, more in Botswana, we've got a lot of importers. Even you and I, on an everyday basis, would go to South Africa on weekends, shop in South Africa, and so forth. And at a time like this, obviously at a time like this, when reserves are declining, it's then imperative to try and protect those reserves. It definitely came with pain to our clients, but what we are doing as Bank Gaborone is that, especially looking at your SMEs, because we've got a key focus on SMEs and your commercial and corporate, we try and smoothen the pain that you then experience with this. We've got a desk where you can come for negotiated rates. We don't usually look to hit you at the upper end of the curve, but we then play around with our creativity to make sure that as much as we should be able to obviously implement what the policy is looking to implement, as we are a highly regulated market, but at the same time, we try to smoothen the pain that the SMEs could experience, and also for the exporters. Yeah.
All right, Rex, thank you very much. We've got a couple of minutes to get questions from the audience. So I'll just ask you to very direct to the point, a couple of questions. After that, I will get closing thoughts from each of my panelists, and then we aim to be done by 10 a.m. I mean, it could be that, it's been so precise, so on point, we don't have questions. It's also fine. But I guess not. There is a question
there. Good morning. Number one, I'm Bank Gaborone customer.
Yes. You make good choices, Moses.
Number two, I'm from Duma FM. I'm Latile Mutle. Look, first question, Keith Jeffries. You're talking about government debt, and I was looking at the data, and it's showing that in the Southern African region, at least, ours is lower, debt to GDP ratio. Generally, globally, our debt to GDP ratio is quite low, even comparing to South Africa, which is at your 70s, and Botswana is below 40. So it's always a general debate. What is the healthy ratio, especially for our Botswana, the Botswana economy, the debt to GDP ratio? Because the argument is that we are still fine, but advance your argument against that, if you will. And then to government, and a lady, I always wonder, basic economics tells us that when government doesn't spend much, your bookers will cry, will start saying there's no liquidity in the market. And I heard you boldly celebrating that the GPOs went down. And that is an indicator that indeed there's no liquidity in the market. Or when you arrive at such decisions, what really informs them? Or you say, look, we'd rather make the small men suffer at the expense of these numbers of saying I've saved billions and whatever. Because economics tells us that to keep economy alive, spend. Because you may be saying, look, now the GPOs are at millions, but you go to your hospitals that say government is owing us. You go into contractors, they've been doing works for more than a year. Government is owing us. So help me understand that. Thank you.
All right, thank you. Another question over here. All right.
Okay, thank you so much, and good morning. Mpapi Tsulofelo from Business Botswana, and thank you, Bank Gaborone, for organizing such. We need to continuously engage, and it's unfortunate that your panelists are very I engage in a very comfortable conversation when we are going through a difficult situation. But in any case, our hopes as the private sector lies in the BETP, Economic Transformation Program. I want to agree with Naledi that having participated, having had a snippet, Keith, I'm fortunate than you, having had a snippet of the program, there are quite a number of regulatory improvements that are targeted to different projects. But here is the challenge, Naledi. How are you going to effect them? Because they need to go to Parliament. And they are across different instruments. We have made a suggestion as the private sector to follow an instrument that is related to Mauritius called the Finance Miscellaneous Act, where you can have all these instruments in one act, and they can be reviewed, all of them at the same time, rather than trying to review one by one. I think that's something that was also reflected in the budget speech, the Implementation Act. Let's get that in action, Naledi. Now from Business Botswana these days, we are not posing questions to you. We will constantly be giving you suggestions until you implement them. So we will not tire, but I think if you do that, the fears that Keith and Buka has that I align with in terms of encouraging business will be addressed, because what we'll do is we'll take 75% step towards ensuring that we have a conducive business environment. So our plea to you will be, let's implement the Finance Miscellaneous Act. It's everything in, and we review all these things at once. Thank you.
All right, thank you. Rory, another question. While you move across, there was a hand here. Just to say, I promise the moderator at some point will make suggestions, not just ask questions like you say I'm doing.
Good morning. My name is Jenuli Sitza. I'm from Yaron FM. I don't know, I find comfort in Naledi's assurances, but I also worry when I listen to Dr. Jeffrey's alarmist expressions. And I just wanted to find out, where are we now? I mean, God forbid, a floating currency, that would be disastrous for our country. And I heard you, Naledi, say that Bank of Botswana has this in control. Does this mean that our reserves have stopped dwindling at the rates that we saw at the beginning of the year? Thank you.
All right, we could have a final question, and then we'll take responses to the questions. Okay. All right.
Good morning. My name is Mudiri Zulu Tabetile. I'm from Stonecliff. Naledi, mine is on imbalance. The posture of government when the government is owed, vis-a-vis when the government owes the businesses. I want to ask you, should Rona as SMEs, should we take the government to the sheriffs? Thank you.
All right. Thank you very much. Naledi, either they have a lot of questions for you or you are very popular, but you can respond to those.
I know that Dr. Keith will also help me with the one on spending efficiencies, the one that came from Latile Mutle. It's actually very good to see you. I've always heard your voice. You know, Latile, I spoke about inefficiencies. There is absolutely nothing to be proud of if I'm buying this, if it's me spending at 7 pula, and if it's government, we are buying the same bottle at 50 pula. That is what we are against. Not that government shouldn't spend, but government should spend, but spend efficiently. And that is exactly what this reform was about. It was about saying, we are going to scrutinize, and we will not allow reckless spending. And that is exactly what we have done. It's not about to say, we are happy to see, it's not the celebration that you were thinking I was celebrating. I was celebrating that we are beginning to bring efficiencies into place. And earlier on when I spoke, I actually said, you know, we've always focused on the inefficiencies in the development budget, but this huge chunk of recurrent budget, which is like 70% of the total, why not focus on making sure that it's efficient? And that is exactly what we are trying to achieve. I think there was another question that I was asked on BETP.
Yeah, all right. Sorry, carry.
Oh, BETP before reserves.
Yeah.
Thank you. You have been great partners to us throughout the BETP process. You've been such a great enabler throughout all our labs. And I'm also glad that you know that in the budget speech, we actually spoke about the miscellaneous approach that you've also just spoke about. So I think BETP will be a very good experiment to test it, and it's something that we are looking to do. Yeah. And then there was the hope and loss of hope between what myself and Dr. Jeffries are saying. You know, Dr. Jeffries is a very good, I always listen to what he's saying to test the temperature. But I also know that having sat on this chair that I'm sitting in, he also knows how hard it can be. But I think we've done enough assurances. We've done enough in terms of the strong reform of BETP that we believe will turn around the economy, will crowd in private sector. It's unique, it's different, it's been done for the first time. It's execution and it's laser focused on execution. And the most important thing is that there is so much buy-in because it's literally a contract between government and the private sector. It's not just about government alone. So we are literally carrying this burden of transforming the economy together. It's not just the government thing. If BETP fails, private sector also fails because a lot of those projects are actually private sector projects that need to be enabled. And then there was a question from Mudiri. I think what you are experiencing, and I must apologize on behalf of government, that there are areas where we are really delaying with payments. You know, it's when diamond revenues that we have been so used to are not flowing in, it becomes very difficult to keep government running. But we are doing our best to respond. It's a very difficult position, but we will continue to bring in the required changes.
He says, can he take you to court? You wouldn't prefer that, would you? Dr. Jeffries, there will...
Respond to some of those points. There was a question about the debt level. And aren't we at a relatively low debt level, so we shouldn't worry about debt? It's not the level that counts. It's the trajectory that counts. And our debt is rising very, very fast. So even if you look at South Africa, and as you rightly say, South Africa has a debt level of 70 or 80% of GDP. Ask where it was 10 years ago or 12 years ago. It was at 28%.
Sure.
They went from having no debt problem to having a really serious debt problem because they didn't get on top of their budget. And that's where we're going. So if we have a debt level of 30% of GDP, which is where we were back in March, that was the last data that was published. But if you run a 10% of GDP budget deficit, your debt goes from 30 to 40% in 1 year. So if you look at the debt trend, it is really scary. In Botswana, it doesn't matter that we're starting at 30, it's the steepness of the upward curve that's a problem. So, as I say, it's not the level of debt that's the problem, it's the trend that's the problem. And very soon you go from having no debt problem to having a debt crisis. And that thing can happen very, very fast. And it all goes back to how big is your budget deficit and what are you doing to rein in government spending. Then you asked about, was government, essentially you were saying, is government not concerned about the impact on the private sector and SMEs of cutting back spending? Well, of course it is. But your question kind of implied that business as usual is an option, which it isn't. So, you know, what I was saying with the exchange rate, but it applies to the economy more generally, you can either have a controlled adjustment, which includes controlling, bringing down government spending, or you can have an uncontrolled adjustment. And that's where you hit the brick wall and the IMF comes in. So you can choose, either have a controlled adjustment or an uncontrolled adjustment, but you don't have the option of no adjustment. That is not an option. So, to me, I like the controlled adjustment option. If it does have an unfortunate impact on the private sector. There's less government spending. But as I said, part of our problem is the government is too big. And you can't reduce the size of government without controlling spending. So it's all about which is the best available option. It's not about imagining an option that doesn't exist and saying, no, we want to do that one. Just to comment on two other things. Yes, there are signs that the foreign exchange reserves have stabilized. I think there's a lot of factors that drive the level of the foreign exchange reserves. The thing that's slightly worrying is that actually, if you look at 2024, when over the year as a whole the reserves collapsed, actually all the collapse happened in the second half of the year, and in the first half of 2024, the reserves are quite stable. Then they fell off a cliff in the second half. This year, the reserves have been more stable in the first half of the year, but we really have to look and see what happens in the second half of the year. But I think the fact that there are some controls on government spending and the deficit is being reined in, I think that's actually the driver of stabilizing the reserves, not so much the change in the exchange rate. One final point, and I'm also hopeful about the BETP. As I said, I like the approach and the fact that it's largely private sector driven and should unlock a lot of investment, which will contribute to diversification and growth and employment creation. But there's one thing to be aware of. It's not going to solve the fiscal problem. The fiscal problem remains that government is too big and is spending too much money. The reason is this. When we diversify away from diamonds, remember the government has had, revenues from the government share of diamonds have been the largest single share of government revenues over a long, long period of time. That has now essentially disappeared. Not completely disappeared, but it's much, much smaller, and it's not going to come back. Diamonds, our diamond mining industry has been unique in the sense that, firstly, it's big. Secondly, it's been very profitable in the past. And thirdly, it's been taxed at a very high rate. Depending on how you measure it, the tax rate is between 81 and 84% on diamonds. And as I say, it's big and profitable, so you've got a high tax rate on a very highly profitable industry. And that essentially is now gone or has dropped down to very low levels. Even if we successfully diversify, and we hope that we will through BETP and other things, we will not replace that lost fiscal revenue. The reason is you can tax Botswana at 81%, but you can't tax anybody else at 81%. That is just not how taxes work. You can tax other firms at maybe 25%. Manufacturing firms get taxed at 15%. So even if we diversify and replace diamonds in employment and hopefully export and GDP terms, we are not going to replace the fiscal contribution of diamonds. So this pressure on the budget and the need to make government smaller remains critical, even if BETP is successful. Final point. Nadine's been talking about government inefficiency, which I've also talked about. I just want to give you an example of how government inefficiency, besides wasting government money, leads to other problems. So think of household indebtedness. Why are households in debt? They borrow too much, essentially. And they've got no cushion, so when things like interest rates go up, they're in trouble. Why do governments borrow so much? Sorry, why do individuals borrow so much? Well, they borrow for lots of things. They borrow for school fees, amongst other things. Why do they borrow for school fees? Because they send their kids to private schools. Why do they send their kids to private schools? Because the public schools are not very good. If we were in Singapore, everybody goes to public schools because they're good. But we spend a lot of money on public education. A lot. A very high share of GDP. It's big bucks, but the quality of public education is poor. If we spent that money efficiently and had really good public schools, and people didn't feel the need to send their kids to private schools and spend a lot of money on school fees, the consumer indebtedness problem would not be nearly as severe. So I'm just saying the government spending inefficiency problem is not just that we buy something for 50 pula which should cost 5 pula, it's that the whole nature of government spending in terms of impact, what we get bang for the buck is really low, and that has knock-on effects. People borrow money to pay school fees. People borrow money to pay private healthcare because they're not confident in the public healthcare system. All these things add up. Thank you.
Thanks. Thank you, Dr. Jeffries. Buka, I'm going to ask for your last final thoughts, 30 seconds. Key takeaways for us.
It's quite simple. MD, penalty. You're doing such a good job when it comes to SMEs. So the challenge now is to see Bank Gaborone playing in a space where they are collaborating with the ecosystem, they are working with SMEs to take the lead in the next frontier. This space, giving free advice, is untapped. There's nobody who's taken the lead, especially within banks, to say, I'm going to be working with SMEs, I'm going to be doing these programs, not just funding. There's a lot we could do, upskilling, and seeing how we can help them going into communities, because then by that, you're creating your pipeline. The future is on SMEs. No longer it's going to be big corporates, or it's going to be SMEs. So collaborate with us, collaborate with the SMEs, collaborate with the ecosystem, and so that we thrive. I see you are doing such a good job, but the space is untapped. And that's where Bank Gaborone should play.
Buka, thank you. I'm going to let Rex come in, and then I'll let Naledi come in thereafter. Okay. Your final thoughts, 30 seconds. Right?
Thank you. So, just in a nutshell, we have, obviously the rhythm of the economy has changed. Bank Gaborone is aware of that change in rhythm. We are there to partner with government. We are there to partner with the SMEs. We are there to partner with corporates and individuals and see how we navigate this shift in economy and build resilience. So the change, obviously, diamonds have set the foundation for our economy, but it's time that we then navigate the transformation going forward.
All right, thanks, Rex.
Thank you. I think as my parting words is really to just agree with Dr. Jeffries that the inefficiencies are quite significant. And the example he gave about health and education is exactly the reason why, as part of the social sectors, we had education, health, and social protection as part of the sectors that we have labs for. And these conversations did come out. I'm even afraid to give an example of the amount, but you will see it as soon as you get the BETP report, the amount that government just spends in social protection. And is it the right spending in terms of, is it targeting the right people? Is it the right people who are benefiting from this amount? And there's an amount that we've been spending year in, year out. So I absolutely agree with him that, the issue of inefficiencies is broader than the buying power, but I also do want to give assurance that we've looked at this and it's there. I hope you will be as inspired by the BETP report as we are, and we are very, very much committed to this transformation exercise, and we look forward to partnerships with yourselves. Mama Kupe, we cannot transform without the banking sector, without funding coming in from yourself to really look at some of these purely private sector projects, some of these government projects, and see where you slot yourselves, reach out to the project owners, and let's keep the economy moving. A lot of them also will have value chain experiences with SMEs, so I think there's really opportunities for everybody. This transformation is not just government transformation, it's holistic transformation.
All right, thank you very much. We have come to the end of our session this morning, or at least this session. Just to assure you, Ramatenge, SMEs are a priority for us. I actually got concerned, Jorge, is there a chance that you've been talking to one of us, or you've been spying into our boardrooms just to see our intentions around SMEs. We will be making big announcements around SMEs over the next 6 to 12 months. That's a sector we are committed to and looking to support. Similarly, for government, we are looking to see how we can support some of the initiatives and support what government is doing. My panelists, Dr. Jeffries, Buka, Naledi, Rex, thank you very much for your participation. Appreciate it. The audience in the room, thank you very much. You've been a good audience. Ruri, I will hand back to you. I think you will just stay here for the closing remarks. Your chairs have been taken.
Okay, let me take this opportunity to thank everybody for your contribution today. This has been quite a very insightful session. And for the audience, for your participation. My apologies that I can't go up there. I'm not feeling very well today. I think a lot has actually been shared, and maybe to the point that somebody raised that perhaps we are not as controversial as we need to be. And I kind of agree with that sentiment. I think our country is going to go through, a tougher phase than what we're going through right now. I think things are going to get worse before they get better. And I don't know if everybody in the audience or in the panel also shares the same sentiment. I'm just looking at maybe the point that Dr. Jeffries made around the fact that government could tax 81% of Botswana. We don't have an alternative. So without the diamond revenues actually coming in, what's going to be the filler revenue generator? BETP is going to take time to get implemented and for us to start seeing results. And as the private sector, I think we need to take it upon ourselves to think about what are we going to do between the period that we're in now and when we start seeing results from the transformation projects. And it requires us to think differently. And as a bank, we've already started thinking that way. So as an example, we realize this liquidity problem is here to stay. So the kind of rates that we are charging you right now, to me, liquidity is the biggest risk that our economy faces right now. Because what it basically means is that if, as a corporate, you are trying to raise funding for expansion or to fund your operations, and you have to pay rates between 25 and 30%, that's going to wipe you out. So I think we need to highlight the risk that the liquidity situation that we are facing as a country poses to the strength of our economy. And it calls upon all of us to think differently. And fortunately, as a bank, we have very experienced balance sheet managers and people who think outside the box. And we realize that this liquidity is not going to come from our normal operations. We need to start thinking differently about how we are funding our balance sheets as banks. As Naledi says, they're also looking to us as government to provide this funding. So it requires us to think differently. As businesses, in terms of your business model, you can't still be relying or looking at Botswana to grow your business. That opportunity is not going to be there for a long time. People are going to start getting strained, which means you have to look at the regional market if you're running a business. Botswana is not going to be enough. And as banks, it also means for our funding, we need to look outside the country as well, to look at other funding options that are available out there, your development financing and all of that. And fortunately, we have already started having those conversations and working with DFIs to see how we can fund our SMEs using different types of funding, non-traditional types of funding. Because if you don't think differently, both yourselves as customers or as business owners, and we as your lenders or as banks, then we will get into a lot of trouble because of the liquidity situation. So I think for me, and to your point around the GDP levels, the problem is, the debt to GDP. If you borrow to fund your recurrent budget, how are you going to pay back that debt if it's not going into income generating investments? And you're going to keep having to borrow for as long as you have the deficit. So all of us need to start thinking differently. How do we generate income that's not based on Botswana. So an export-led economy needs to take precedence. And then how do we fund ourselves not using the traditional forms of funding? Only then, if we all think that way, can we get out of this situation. But it's eminent that we start thinking that way immediately. Because right now, if we still have failed diamond sales, or the revenue that's coming is way, way less than what we've been getting, at some point, something will give. Something will give. Thank you.
Thank you very much. If I may please, panelists, if you may please just get on the second staircase for a group picture. Thank you. A round of applause to our panelists once again. And a well-deserved round of applause to our moderator, please, CFO Tsaone Raboloko. Smiling is allowed, Raboloko. Thank you. All right. And yeah, to you, cameraman, if you do need a picture of me, please do talk to my PA. It's fine. Get that. Awesome stuff. Thank you to our moderator and panelists. Such a lively exchange there. Your reflections truly reinforce the key message that resilience is built not in isolation. Please do feel free to join me in the stage. But I just wanted to talk to you, our great audience. You have been a great audience. And I must say that if I was to allocate titles, I would call Dr. Keith Jeffries a prophet, and I would call Bukama Tenge an advocate. I would call Naledi thereof our doctor, and obviously the treasurer and Raboloko as defendants in this case. But really, thank you very much. So profound. For those who just joined, allow me to once again reintroduce myself. Ruri Kopi. Not very far from here is where I hail from, a place, little town, come village in the next, or come town in the next couple of months, I suppose, Naledi, if you may allow. Little village of Mulepolole. So that is where I'm from. So I just want to thank you, audience, for all your questions. Amongst us here, I've noticed that we do have asset managers as well. It is my hope and plea that on the next engagement, we could have Raboloko as part of the panel, an asset management representative as well. All right, thank you very much. As we go on or proceed to our closing remarks, I just want to obviously put across a few words of takeaway, I believe. A lot to stomach in, but I think one word or a couple of words, standalones, which I took away was accountability. I took away prudency. I took away commitment, scalability, efficiency, and red tape. So it is my hope, and it is my hope that each and every single one of us here has a word that they have taken away, and a word that we can definitely work on in our own individual corners. I am forced to preach, but I'm not a preacher, so I won't go to that part of the business. So as we approach this close of this morning's discussion, a few powerful items, themes have been shared: partnership, innovation, and resilience. It is clear that navigating Botswana's economic shifts require us all, government, private sector, and financial institutions, to move together with purpose and clarity. To offer our closing remarks and share Bank Gaborone's reflection and commitment to what lies ahead, please join me in welcoming the man who some say he shaved his mustache for this event. A man who is known to be an adrenaline junkie, rides his BMW 1000 RR, and applies the same mentality of his junkie adrenaline in his business unit. Please, ladies and gentlemen, welcome together Mr. Khomotso Mamix Tagadu.
Good morning. Wow. So I was troubled when I was coming here to say, the way things look, what exactly are we going to talk about? Are we all going to come in here and start crying and start feeling sorry for ourselves and start looking, yeah, we can look up and say, God help. But I think God has been kind to us as a country for many years and allowed us to storm. Even when other countries come this time, there will be panic. We'll be going to shops and, pulling things out. We've seen it. This thing's happening. But at times, we need to appreciate our calmness and our kindness to each other that allow us to come into a room like this and start, having this discussion. Before I go into my closings and maybe thanking everyone for joining, I picked themes, even myself. One of the greatest themes from you, Doc, is around we need to change patterns of how we do things. It's simple. You want different results, you have to change patterns. I mean, he said it from Business Botswana to say, we can't be doing the same type of changes that we've been doing for many years when we are facing with this type of trouble. My boss always said, I only need one pager. I don't need 100 pages from you. What is it that you want to do and when? So at times that helps me because then I don't have to, even ask Tsaone to edit whatever that I'm trying to lie about. The message is very clear. Are you going to do SMEs or not? I'm the one who's at hot seat of SMEs. And then on the other side, maybe to Naledi, I would say, where the private sector is doing those little moves of trying to demonstrate to want to lead the economy, let's allow. Let's not try and review everything. At times when you review everything, you even review things that you shouldn't be reviewing. Those little streams, we can all learn from them. And I know this document that you're talking about, I'm looking forward to see it. I'm quite sure that it's bringing quite things that would really change the environment. But the little baby steps that we are having right now allow them so that we don't always continue to cry. They will bring hope. They will change how the small man on the ground is looking at everything. And then, Mr. Matenga, for me to you is the ecosystem. So recently I had a meeting with the colleagues from the Ministry of Trade and Entrepreneurship. We spoke for about 15 minutes. When we ended, I said, guys, can we land? Can we just land on this thing? We've been talking about NDB being there, CEDA being there, everyone being participant, layer being there. What is the missing link? Where do we meet? Where do we solve for this particular customer? And next time we're having this meeting, you're going to be part of it, Mr. Matenga. Because then in the room, we're missing the customer. We're having all these people talking, and we're missing the customer. There's a lot. I think, Barengastwan, can we just stop begging at the government and start doing something for our own? So maybe before I get fired, because I can see my MD looking at my speeches saying, Mamix, we didn't have that for you. Let me get back on the assignment. My assignment is very simple. It's to thank you, Doc. It's to thank the panelists, Naledi, Retsang, obviously our moderator. You've done a good job. You should take the challenge that you didn't ask hard questions. In the next sitting, we are going to have to bring that man as a moderator, and you will be sitting on the other side. If you want to change, you have to change patterns, isn't it? And yeah, so I always want to thank Nchizi for reminding us that as a bank, we are connectors of positive change, and we're intentional about it. We do it small, but it's very impactful. When we sit on our little corners and the MD reminds me to say, Mamix, you're not going to tell people things that you're not doing just because you want to sound smart. You have to tell people things that you're going to sit in your office and start executing on. Obviously, our guests, our stakeholders, we thank you for the time. With all the troubles, I wonder exactly where you got this 3 hours from your offices, but we really appreciate. Without this type of engagements, we are not going to make it. There's a time to pause, but we can't pause forever. They say never waste a troubled season, and I think we are not doing that for ourselves. In closing, I really believe these discussions would change how we think. I hope that when people get back to their offices, I'll receive a call to say, Mamix, can I be part of that ecosystem working team with the Minister of Trade and Entrepreneurship? I'll be happy to bring you in. I'm looking forward to a call going to Rex saying, Rex, are you sure we have that desk? Can I test it? You know, what do you really talk about when I want to really negotiate my pricing? Of course, there's plans that I'm looking into. So all these things, I'm saying them, and I really want to say thank you, but I can't do this without thanking my MD, thanking the board of Bank Gaborone, the staff of Bank Gaborone, and the colleagues and our partners who put this thing together. We thank you, the media, for joining us today. We hope that the message does not contradict all the BAU things that we've been saying. But today, it's something that we are looking forward to a brighter light going forward. I thank you.
Thank you, great audience. Mamix is a man of 2 words in his vocabulary, start and land. And yeah, did he not disappoint by mentioning that he wants to land? Where do you find this gentleman here? I am found in Bank Gaborone. I sit in the Forex desk, Mr. Keith Jeffries. Thank you, doctor. And yes, I think it is worth mentioning that when we talk economics, we talk opinions. So just be guided that each and every single person will have their own opinion or some stuff. So with that said, we have come to the end of today's networking session, of today's session, and I do have here that there will be a moment for networking, for indulgence, and I thank you all for being such a great audience. May the peace of the Lord be with you all. Amen.